In this video, we'll continue where we left off, and now we have the adjusting entries, or all the entries after the 30th. So you'll see all the entries on the 31st. These are your adjusting entries. All right, so let's look at the first one. It says ABC calculated that 10,200 of supplies was used up in January. So remember from the lecture videos, you can be asked two things. You can be told what was used up, or you can be told what the balance is. If you're told what was used up, then it's easy. If you used up $10,200 worth of supplies, then you have supplies expense for $10,200. And so the journal entry is, you're going to go to the supplies account, and here is my supplies, right? You used up 10,200, so this has to decrease by 10,200, so supplies has to come down, so you're going to credit supplies, and then whatever you used up, you're going to put that as supplies expense. So you're going to have here, debit to supplies expense for 10,200 and a credit to supplies for 10,200. Okay, so if I look at my supplies now, here you'll see the 10,200. Now I have 12,000 left, and my supplies expense, if I look down at my supplies expense, here you'll see 10,200. All right, so office supplies expense selling, right, 10,200. So we're going to put it in that account. Now I could ask this a different way. Instead of telling you instead of saying to you that you used up 10,200 in supplies, I could say the balance in the supplies account is $12,000. So I could switch this and says ABC counted the supplies and there was $12,000 of supplies left. If I switch this and I put the balance, it's going to be the same entry, right? You would just say, okay, here's the total amount that we had at the beginning, 22,200 minus 10,200 minus 12,000, and then you would get the journal entry. So remember, this can be asked two ways. I can either tell you how much you were used up, or I can tell you the balance. If I give you the balance, then you have to calculate what was used up. All right, so now we have the next two. There was an adjustment to prepaid insurance and adjustment to prepaid rent. So let's look at the prepaid rent and prepaid insurance entries, right? So ABC Company purchased 12 months of insurance for $12,000, and they purchased 6 months of rent for $24,000. So they purchased that in January, from January 1 to December 31, from January 1 to June 30th. So we only used 1 month's worth. So for prepaid insurance and for rent, we need to calculate 1 month's worth of prepaid insurance here and 1 month's worth of prepaid rent here. So let's go ahead and calculate that. And you'll see for prepaid insurance is 12,000. So 12,000 divided by 12 months is 1,000 per month. And then 24,000, which is my prepaid rent, divided by 6 months is 4,000 per month. Okay, so what happens is prepaid insurance needs to come down by 1,000, so I'm going to credit prepaid insurance. I used up that insurance, so that's going to be insurance expense. Down here for rent, it's going to be the same thing. I used up 1 month's worth of rent, so prepaid rent has to come down by 4,000, so I'm going to credit prepaid rent. Since I used up that 4,000 worth of rent, then that's going to be rent expense. So my journal entry for those two entries are going to be debit to the insurance expense, debit to rent expense, credit to prepaid insurance, credit to prepaid rent. And the insurance expense was 1,000 here and 1,000 here, and the rent expense was 4,000 and 4,000. And don't forget to post these entries. So I have to go to insurance expense and rent expense down here, right? So here is rent expense for 4,000 on the debit side. It's rent expense administrative. And here is insurance expense for 1,000, insurance expense administrative. So I have those. And then I come up to the asset accounts. And here is my credit to the insurance, prepaid insurance for 1,000. Here's my credit to the prepaid rent for 4,000. Okay? All right, let's look at the next one. So it says ABC performed work for a customer and will be paid next month. So you do work. Whenever you do work, that is an automatic credit to service revenue, right? You're not being paid now. You're being paid next sometime in the future. So that's accounts receivable, right? Very simple entry. So I'm going to debit accounts receivable for 15,000, and I'm going to credit service revenue for 15,000. And again, I need to post it. So I come down for 15,000 and then I credit for 15,000. Okay? So that's what I'm doing. I'm debiting and I'm crediting for 15,000. All right? So the last entry that I have on January 31st is ABC's sales employees earned a salary bonus and will be paid next week. So they earn a salary bonus and will be paid next week. So they did work, so that's going to be an expense. So it's going to be salaries expense, and then I'm going to credit salaries payable. Okay? We don't put salaries in accounts payable, we put salaries in salaries payable. And the amount for that is going to be $9,000. So I'm going to debit 9,000 here, credit 9,000 here, and I'm going to go down to salaries expense, and I'm going to debit salaries expense for 9,000, right? Because it's the selling, and then I'm going to credit salaries payable when I find the liability account for 9,000. So remember, this is the salaries will pay to the sales employees. So I'm debiting salaries expense selling. Okay? And that is our adjusting entries. Okay? All right. So I'll come back and do videos for the remaining steps.